Good morning. It's Tuesday, the 9th of August, and it's me and Jamie here today, Signal Centre, powered by Acuity, and welcome to Talking Ball. Just about made it, Jamie. I was struggling away there trying to get into the mode when there's a few little bugs in the system. It's never that easy.
No, it's not an ideal start to the day, but we're here now and we're ready to dive in and have a look at some markets this morning.
Exactly. Did I miss much yesterday?
Not really, no. We had a little look at our last week's guns to head trades, which you didn't miss much there because I think we all got stopped out. But a better day yesterday, I think, for at least myself. I'm not sure how Joe got on, but
yeah, you don't really care how Joe got on, do you?
No, I don't at all.
beating.
It's all about me.
Right, we're going to kick off with the latest headlines. I'll quickly zoom through these and then get onto the charts and dive into there. Centex Eurozone Investor Confidence Index edged higher to negative 25.2 for August from negative 26.4 previously, but was below consensus forecast of negative 24.7, so a small miss there. According to Centex, the situation remains very difficult and a recession in Eurozone is still very likely. We all know that. Latest New York Fed survey recorded a decline in 1 year inflation expectations to 6.2 from 6.8 previously, with a 3-year expectation index declined to 3.2 from 3.6. The decline in expectations should offer an element of relief for the Federal Reserve, although it will remain on high alert, especially with the looser financial conditions. US Treasuries gained some ground on Monday with the inflation expectations data providing an element of support. The 10-year yield retreated to nearly 2.75% on Tuesday, which tended to cap dollar support. Australia, the latest data recorded a decline in consumer confidence to the lowest level since April 2020. There was, however, a significant increase in business confidence in the month, with a headline figure of 7 from 1 previously, while the conditions index strengthened to 20 from 13 previously. The latest BRC data recorded a like-for-like increase in retail sales of 1.6% in the year to July after 1.3 decline for June. Barclaycard recorded a 7.7 annual increase in July consumer spending. Funny, everyone's running to their Barclaycards to get them out of the dire situation that they're facing. But this was dominated by a 44% increase in utility spending. There we go, UK energy spending costs going through the roof. Yeah, what fun we have to sort of think about. Now, I'm just going to set my chart up, which I haven't really set up. I had a quick browse on these yesterday when I got back, and yeah, I'm going to dive into Bitcoin to start with. Share
Very
screen.
nice.
Here we go. Right, Bitcoin. So we continue this corrective rally. This is the weekly chart, and we reversed from this support at 17,770 higher. The highest we've got so far is just below the 25,000 level. Still potential for further upside, I believe. The real test for Bitcoin would be a break back above the 28,800 all the way up to 32,000. So there's a big, huge band of resistance all the way up there. And really, bulls need to recapture ground to stave off the concerns around the cryptocurrency. I still feel there's a long way to go before they even get close to that. So really, for me, not on the radar as an asset to be looking to dive into. The 21-day moving average, we've hugged this 21-day moving average for a good 3 or 4 weeks now, and we've broken higher yesterday, really pushed higher towards that 24 to 25,000 area. This is the corrected channel, but for me, this looks like a bearish flag potential. So yeah, although there's there's further resistance up above at 25,500, as I say, the real main resistance is still a long way off, even in Bitcoin terms. The amazing rallies that has. On the 4-hour chart, we can see the trend has moved higher. This is quite a nice little. I know it's an intraday or an intra-rally inverse head and shoulders formation, but they are still quite nice to look at to give you some idea of where the pressure is coming from. And you can see the sort of sell-off and the nice supportive rally, the left shoulder, the head, the right shoulder formed, providing a neckline down at 23,284. And once we broke above there and the cloud, two sort of like bullish reasons, it broke nicely higher. Again, sellers seem to be coming in as this market rallies. So if we look at this from an alternative point of view, you could well be looking at the opposite on a longer term basis. Left shoulder here, neckline anywhere up there. So watch out for that as well. So any sort of swing back below the cloud, below the 23,000 level, and we could well see sellers coming in and grabbing some profit for any longs posted down here. So let's take a look at commodities now. From what I saw, gold continued to strengthen. Yeah, it seems to be quite well, it's pretty positive from a gold aspect since we hit the major support. So again, we're seeing this major support level all the way down here. Let's make it a daily chart. It looks a little bit cleaner. Here we go. This 1600 and just below 1680. That provided the turnaround. The market has corrected higher in a similar fashion to what Bitcoin has done. This has been also driven by the dollar weakness that we've seen. These sort of dollar assets appreciate when dollar goes through a weak spell, and the opposite happens when they've gone through a rally, which we've seen. The dollar rally has been all the way from March all the way down here, and that's put pressure on these assets. So we're getting up to decent, significant resistance levels. We've talked about the $1,800 level being a more of a psychological level than anything else. Above that, we've got a couple of levels that we picked up from the sell-off, 1815, 1830 also is a 38.2% Fibonacci retracement from the top to the bottom. We draw Fibonacci retracement lines in. 38.2 is just a normal retracement. So, and we've got a potential trend line coming in here in, well, that's coming in at 1805. So definitely a level to watch. 1800 breaks, you probably get a few stops, a few shorts flushing out over that. 1805 is probably a nice level to start to fade this. As you can see, the volume has been pretty insignificant. There's no real institutional interest really in the market at the moment in terms of adding to positions already holding. So yeah, for me, this is a rally which will probably be capped out around just above the $1,800 level. Looking at silver, silver's fighting really hard to stay above the previous swing low, which turned into resistance. This 2045 level, I think it was, yeah, 2045. We're trading at 2063 at the moment, being up to 2075. So nicely above there. Posted a really bullish day yesterday, broke above the resistance and looks pretty good. So maybe we've got to test some levels on the upside for this. Again, if we look at the Fibonacci retracement levels, we can draw a nice little impulsive move lower. You see the Elliott wave, you've got the first wave lower, second wave correction, third wave lower, fourth wave correction, fifth and final wave, and then you get an ABC correction. So let's stick a little 38.2% fib on here just to see where that is. That gives us a good indication that we could be heading to 2150. Now that would be significant because looking across the chart, you can see that that's 2150 proved to be great support, or 2142 it comes in at great support on the way down. Two nice little touch points, broke through, false break initially, came back 2255, provided a cap, and then the market broke down again. So yeah, that looks to me like we're probably, silver's probably heading, has still got a little bit more life left in this rally before the sell-off. Again, the volumes are very similar to gold. They're sort of like dropping off as we rally, bit of bearish divergence. What else can we look at? We'll look at I'll dive into Forex in a minute. I haven't done oil, have I? Have I missed oil? How could I? How dare you miss oil? Especially as we're talking about it, as everyone's paying for their oil bills on their Barclaycard, so you've got to really dive into that. We should maybe do see what sort of like relationship that has, utility spending and oil prices. See where the lagging effect is. Anyway, this continues to sell off. We highlighted a potential ABC correction a long while ago now, and that's played out really nicely. That's actually hit the target we were looking for at 8755. We're trading just above there now. We've bounced off them lows, and we're sort of like trading a little bit more positively on the week. We can see we've had a nice reversal formation posted. This is like an evening doji star morning doji star formation, morning at the bottom, evening at the top of the chart, and really nice retracement. And the 21-day moving average it will act as a decent resistance again. It's like hit that price point like 3, 4, 5 times, so it looks pretty good to sort of like really give us a little bit of direction on the daily chart. 94, around $94 that comes in. 92.27 is the resistance from the 2 points. So we're looking at all these charts. They all look very, very similar on the commodities basis and the crypto basis. They're fighting back to try and regain ground, but there's some decent resistance above that is going to hamper that rally. The 4-hour chart just got an Ichimoku cloud on here really, and it maintains we're in that downward trending market. Got the potential maybe for some sort of reversal or bottoming formation that we should really look out for. If we get a clear out of the 86.40 level on the downside, then this continues. If not, could be some sort of head and shoulder, inverse head and shoulders formation forming here, or some sort of rounding bottoming formation. Let's wait and see on that. I'll pop across, as Joe's not here, I'll pop across to take a look at the main forex markets. Dollar, well, let's take a look at the weekly chart first. Euro against dollar, again, had this little bounce back up. Euro strengthening, dollar weakening, and last week was quite a bearish week really overall. Bearish engulfing candle really on the previous week, but looks a bit doji like, so it's a really big range. We did have a lot of volatility last week, and obviously non-farm payroll to finish it off, so we got some nice movement out of it. Slightly more positive this week, and we're we're really sort of battling with the 21-day moving average. Prices above it now. We've poked our head below it, but we've closed above it for about 7 or 8 days, so that's positive. As long as we can maintain that. We've got a little bit of a trend line or a potential trend line we can draw in. Yeah, I'd call that a trend line on the daily chart coming in where the 21-day moving average is. So really key for prices to hold on to this level and close above this level. 117.36 that comes in, 101.74 that comes in at. A lot of people would like euro to be 117. Yeah, so we're just sort of simmering above the parity level, and really again, volumes not really doing anything majorly significant. So as we're getting this corrective rally, there's no real sign of volume coming into this rally, so potential is for this to be a bit of a dead cat bounce. So sterling dollar, we saw the signs of an inverse head and shoulders formation. This played out quite nicely. Didn't quite reach the 123.35 level, which we were hoping for. That would be the measured move target of this inverse head and shoulders formation. Got quite close, 122.93 before market sold off again. Again, we've been supported by the 21-day moving average. Nice bit of volume coming in on the 4th of August. That was last Thursday. But Friday, we saw the move lower, strong dollar effect after non-farm payroll, and prices pushed lower. Levels to watch really on the downside, the 120 level, pretty key. On the upside, the 123 level, that's the resistance to watch. And yeah, overall, still in a downtrend. There's no denying that. No real sign, apart from this nice little holding pattern, that things are going to change anytime soon. We saw prices break above the 21-day moving average and hold there for a good couple of weeks before the move lower continued. From a dollar perspective, I still think we've got we're going higher overall. Let me get a look at my weekly chart. Really, for this is the double bottom formation we're looking at, the major formation. That looks like it. The measure move target for that is around about 119. Not saying that's going in there anytime soon, but over time that could be likely. Obviously, a lot of it is based around interest rates and how the differential between the US interest rates and the rest of the world really continues. We've got 10-year, as we said already, pairing back to 2.75%. It's been above 3 before, so still a way to go. Dolly Yen, this obviously, we can see the weakness in or the Dolly Yen paring back, but then rallying last week pretty significantly. Nice bullish hammer posted there. Back really at this resistance level, which we saw all the way back in February 2002. So is that before you were born, Jamie? It's not quite, is it? But it's sort of like that's a long time ago. These are the sort of levels we were trading at, and in between we've obviously been down a lot lower than this. But yeah, this bullish move higher looks like it's continuing from an Elliott wave perspective. Does feel like we're in a fifth wave, maybe going to get maybe a C-leg correction out of this. We have to just wait and see how that plays out. But at the moment, the dollar on the front foot as far as dollar yen's concerned. I'm happy to unless anyone's asking for anything in particular that we can dive into, I'm quite happy to hand over to you, Jamie, to take a look at. Oh, I'll do it. Shall I do indices?
Yeah, take a quick look at indices
Yeah.
if you want.
I'll have a quick look at indices. I'll go for the ones we normally talk about. DAX rallying. That we've had 3 positive weeks of this rally, and that is basically potential for a double bottom. We've got this low point here, and the neckline would be up here at 14,900. That's a long way to go, and we already look like we're running out of steam a little bit with last week's doji candle. I'm sure we'll see it in the stocks when you drill down into the individual stocks, Jamie. That we've seen quite a nice bounce, but there just feels like there's a bit of hot air supporting this bounce. On the daily chart, we saw last Thursday post a shooting star. We haven't got recaptured ground above last week's high, and it's been quite flat. Well, it's really flat on non-farm Friday, flat on Monday. If not, we could actually drill down and say that's very close to another shooting star, and we're off to a negative start this morning. So yeah, for me, we filled the gap. This gap here has been filled. That's a for the bears, that's a good thing. They can relax a little bit now once that's filled, as long as prices remain below the 61.8% fib, which comes in at 13,822. Then potential next move for the DAX is to lose ground again. 21-day moving average comes in at 13,265. On the Dow Jones, we managed to break above a support line that we've drawn on here from I think we can go back a lot further than that. This 33,029, and prices reversed from there, posting a shooting star, so slightly negative formation, and we're off to a slightly negative start. Could this be a potential opportunity for the gun to head trade? Maybe, Jamie. I always come back in a with after a fresh look, or even a day off, you sort of take a fresh look at the market. Sometimes you just start to be brave enough to fade these rallies. The Nasdaq has performed slightly better. I'm going to redraw this corrective channel to take into consideration these points here. We could even go as far as there, and that gives us a nice channel. The last 3 days haven't been able to push aggressively past the top of this channel, but we've touched it a nice 3 or 4 times, which is pretty good. So I like that. But the rejection yesterday is something to watch. A break below the 13,080 level would sort of bring in last week's range, and then below that 12,806. With a 38.2% fib above, that's actually taken from all the way back there. Let's see how it looks if we take it from this rally here. Yeah, we've made our way to a 50% Fibonacci retracement level, which is another significant one. Not quite as significant as the 38.2 or the 61.8, but it's a decent one to look at. So yeah, rejection there. Really, I'd be looking at a break of 13,065 or a break above the 13,400 level. They'd be the 2 levels to sort of look for the next push. I'm happy to leave it there, Jamie. Pass over to you so you can drill down into a few of your lovely stocks.
Cool. Just before we do actually, Steve, we do have a quick request to have a little look at euro against the yen. If you could maybe quickly
Euro
pull that up
yen,
and give
yeah,
us your
sure.
thoughts.
Yeah, euro yen. We've had a nice on the daily chart, obviously pretty decent. We formed a. If we look at it on the daily chart, we formed a higher low, which is good. But it's at the similar sorts of levels. So for me, this has potential for proving to be a nice turning point because of the potential for a double bottom in this rally. Although it's not a double bottom at significant lows, it's again an intraday one, so it's not quite as significant. But a nice turnaround. This morning star formation formed on the daily chart. That was confirmed by the third candle, so that was a positive. That was the level to sort of like to add to longs or to enter longs. And you know, your stop would have been below this low, and you would have been looking for at least. I mean, we always look for at least a 2-to-1 risk reward, unless there's some significant level below before that. But yeah, this is we've had 1, 2, 3, 4, 5 positive days of price action, and we are approaching some support at 138.17. But yeah, no reason for this to really just it's slowed down. But we can take a look at this. We're trading around the 38.2% fib, as we said, but maybe potential for this to continue the move higher. Looking at the 4-hour chart, we can see we're breaking above the Ichimoku cloud, which for me would be a decent sign. A close above the Ichimoku cloud. The Ichimoku cloud can give you numerous buy-sell signals. You've got the lagging lines, and the signal line here crossing over. That would be a first buy signal, but you want confirmation of it being above the cloud, and that's what you're getting potentially today. So if we get a close above the 137.82, then there is potential for this to continue a little bit higher. You could actually say that, could you actually say we've got an inverse head and shoulders formation potentially? It's not a bad one. This break was significant here, breaking above these highs, the neckline, pushing above that neckline, and we've actually come back and retested it. So there is potential for this to go a bit more. If we do get this confirmed and continuing higher, we can give you a nice measured move target. Again, bring that would be a pretty significant rally, well above the 61.8. So that target comes in around about 140.50 if we can manage to get above there. Although I think there's decent resistance prior to that, so you'd probably be looking for that 139.50 level. Any more before you go?
No, I think that's it. Shall I crack on with some of the
Yeah,
stocks? Right, here we go. Let's get it on the screen. This is what I'm looking at. Biggest gainer and loser of the day. Our biggest gainer is this KRTX. I think it's an X. It is an X. Or Karuna Therapeutics, which had this nice 71.84% move, up $100 on the day. And that looks to be off the back of earnings. Let's have a little look into this. Here we go. 73% higher after saying its CAR XT drug candidate met its primary endpoint of demonstrating a statistically significant reduction in negative schizophrenia symptoms compared with a placebo. So we've seen these type of stocks, they can move quite heavily on that kind of news. So yeah, 71%, a nice move up there. Our biggest loser, we're back to HKD, and we looked at this a few times with its kind of crazy move up from $11 to $2,400 in just a couple of weeks. But every move on this now is going to be well, at least for a little while, will be quite a big percentage move. So down 43.85% yesterday. I think this is actually a bit of had a little read. It's one that the meme stock crowd quite like, and that's what kind of squeezed it up higher. But coming off now a little bit, 43.85% down yesterday. Taking a quick look at the stock heat map, and it's a bit boring yesterday. Nothing too much to write home about. I guess the biggest thing of note for me is Nvidia, which was down 6.3% yesterday. Looks like that was on some guidance about earnings rather than earnings itself. But we'll have a little look at that in a sec. Other than that, it's a pretty bland day. Microsoft down 1%, Amazon down 1%, Netflix up 3%. Not really a lot to write home about here. Electric technology, obviously, I think that struggles more because of the stuff with Nvidia. I think that just kind of dragged down the sector a little bit. But we'll jump into a few of these individual names. There was something a little bit interesting. I don't know if you missed this yesterday, Steve, but we had a bit more of a squeeze on some of these meme stocks. We're looking at AMC here, which closed 8% higher on the day, but at one stage was 25% higher, 24% higher. So yeah, big squeeze upwards on that. Had a little look at what the news was on this. Yeah, there you go. AMC surged about 25% at one point on Monday as the stock continues to trade higher in its uptrend, which this news company predicted in its analysis. Well, great job them. But yeah, posting a bit of a doji candle there, so actually closing around the open of the day. It's a little bit difficult to kind of suggest or predict where this could go next. I think, we had this previous resistance here, which, I'll change it to blue now. That could be a nice area of support if price heads back that way, but equally our next resistance level will be about 33.92, which I think we had a look at yesterday. We'll quickly flick over to GameStop, which had a similar type move. Ran right into the resistance which we have marked on the chart. Again, at one stage yesterday, this would have been up. Let's see, this would have been up about 20% as well. So did have that squeeze, but both of these stocks did sell off towards the end of the day. Still up 8.5%, so a nice move there. But the technicals playing out quite nicely. Ran right into that previous high before selling off there. Quick look at Apple. I'm not sure why. No, I don't think I will look at Apple today. AMD, we've got doji candle here. We've had a really nice move upwards on this that we've been keeping a close eye on. Potentially looking for some reverse trend line support if we do sell off a bit further, for this red line to hold up as support. Keep an eye on that though. What else are we looking at today? Meta, look, I really thought yesterday we were going to break this channel we're in. It looked like it was going to be the one, but it sold right back and it closed inside it again. So this has been such a tight range. It's compared to the price action we've seen, it's been stuck between 157 and 171 dollars for. It did try and escape once. We said this before. It did try and escape, came right back in, and yeah, she's been pinballing around. So potentially an explosive move if we do get a breakout of that at some point. Honestly, it was a bit of a dry day yesterday on the stock side, so not too much to look at. But we looked at the fact Moderna a couple of days ago did break through this resistance level. It did feel a little bit overbought at the time. We had this really powerful day off the back of earnings, then another powerful day, and then we sold off on the Friday and into yesterday a little bit. Nothing too crazy. If we take a look at the volume, volume's starting to come off compared to those bigger volume days. So perhaps just a bit of a retracement, and maybe even see a move higher. I think for me, sorry, the best thing we could get here from bull perspective is actually a bit of time at this level, a bit of a coil almost before a bigger push higher, because you don't want it to get too overextended to the point where there's not too much behind the move. So a bit of a pullback here wouldn't be the worst thing in the world in my eyes. What else have we got? Microsoft, not a lot going on there. We did say we'd have a little look at Nvidia, and we can see we gapped down yesterday, and I'll pull up the news report on this. Let's have a quick look. US stocks and mixed, and list changed on Monday after Nvidia's disappointing second quarter sales guidance brought the tech sector under pressure. So yeah, that's what we were talking about earlier. If we take a look at, so we closed up at 189 on Friday. At one point we're actually down about 9%, but we did buy up towards the end of the day. Volume really started to pick up there as well, but still in this, we could draw a bit of a channel here. It's not going to be perfect, but something like that. So we do still have, I'm just going to cut out that top bit, but you see what we're saying here. We've got these lower highs, we've got these lower lows, and there is the potential here for maybe even a bit of a bottom being put in. If I pull up this for an inverse head and shoulders potential, there we go, something like that. And if we then get some buying come back in at this level, that could be quite a nice area. For me, the important mark to get above now really is kind of, you can put it down somewhere around here. If we get a conclusive break above 193, perhaps we can start to see a bit of a move higher, but you don't want to preempt that, so keep an eye on it. I've got Pinterest on the chart. We had that move off the back of earnings where it really did buy up quite aggressively off this support level we saw and sold off on the actual day after the earnings. But since then, it's been a bit strange. We've had these wicks on the upside, which suggest that sellers are really trying to defend this like 2364 level. But I mean, let's see how long that can keep up. They're clearly trying. I mean, these are bearish looking candles, but I mean, a break above it would show a bit of an exhaustion from the sellers. It could be quite an explosive move upwards again. But if they do defend it, you know, we've got this gap open here, so that could be a nice looking target on the downside. I think that's pretty much it. I would quickly look at Palantir, and this had earnings out yesterday, down 14.24%, ran right into that 61.8% fib level we had there, before selling off quite aggressively on the back of what I guess was an earnings miss. Looks like quite a significant miss too. So yeah, a pretty bad day there. Obviously we've got this gap open now, but I'd expect a bit more selling pressure to perhaps come in today. That's the intraday chart, so you can see, yeah, really did struggle off the back of earnings. I think that's pretty much it. Maybe a quick look at Tilray. Tilray starting to pick up a bit of volume, but honestly nothing too much to look at here. Breaking above these previous highs, which is good. But you know, this has been pretty woeful for a long time, so I'd need to see a bit more for me to get a real turnaround on this.
Yeah, then Tilray stocks, obviously, with the they're really a cannabis stock,
Yeah.
or they have a lot to do with that, and they can just all of a sudden come out of nowhere. If you start to see some supportive structure, even if it's a small one on there, that tends to be a sign that someone in the know might be just like accumulating. You can see the volumes picked up a little bit.
Yeah.
So yeah, could be they sort of like the game and the MC stocks. They sort of can explode overnight.
Sure. Yeah, and I mean, you know, people got their own kind of trading styles and opportunities, but you know, so long as you're keeping that risk all good and you've got like your stops in place, you know where you're going to get out if it turns against you. Then you know, as you're saying, Steve, you can get some quite nice, pretty quick moves. I mean, if we go back to when it was really all happening with the meme stocks, I think that all started really in November, didn't it? So I mean, seen it once here where it's kind of up 100%. You do get these really quick, sharp moves, but they do then often sell off quite aggressively. So they come back down as quickly as they go up. So yeah, one to be very quick-handed on, I feel, but certainly some money to be made there if you've got a good setup that you like. But I think, I mean, that's pretty much it. Was a bit of a muted day again yesterday. I think that's pretty much it from me actually there, Steve.
Yeah, brilliant. Well done, mate. Okay, just a couple of questions from Ryan on TradingView, and a couple of things he pointed out. He said, "Oh, like, why don't you boost your video? Press the boost button." So I pressed the boost button. I don't know what it did, but I think a few other people have boosted it as well, so that's good. I think if people boost it, it's good.
Nice.
Also, he's asking about the CPI report, and we're going to come on to. Let's have a little look at what we're expecting. CPI that's coming out tomorrow. US consumer prices. Yeah. Well, we've got one thing I will show you is Acuity products. Let me just get them set up on another page. Acuity is our parent company. They really sort of focus on news sentiment analysis, which is a different type of analysis to what we look at. We look at the technical analysis. News sentiment analysis can be pretty decent, and I'm trying to see if I can get the it'll be under the widgets. It'll be on the widgets list, I think it is, Jamie, isn't it? It's the calendar.
Yeah, it's there.
Let's open the calendar, see if we can share this with you, and give you a little bit of a look at what how nice this calendar looks. Let's bring it onto here. You have to let me know if you can see this. So calendar CPI is out tomorrow. We look at this, moves from left to right. You see Monday, Tuesday, Wednesday, Thursday, Friday. You get the high impact, medium impact, low impact, and you get all the news associated with this. Forecast that this comes from the major outlets. We don't forecast it. Forecast it as 2.9. The previous was 2.5. So that's normally the general market forecast that you see. I think the question from mine was, do you think it will come in over or under the forecast? This is Chinese CPI. What am I looking at that for? We don't really want to know that. German CPI, Aussie CPI. Where's the US CPI? Or is it not?
You can filter it at the top right, can't you? Which I don't know if that will help you to the US up there or something. Yeah.
Let's just look at ones that we're really focused on. US CPI here. So it's got it as a medium-term impact headline, and this is for Thursday, or is this one? No, this is this one. Come on, get a grip, Stevie. Shows I haven't been on this very much. So the consumer price index for month-to-month in the US is forecast to come in at 0.2. Previous was 1.3. Yeah, so we don't really sort of like speculate on those kind of things. It's almost like you can't, without having the access or be monitoring that on a daily basis. In the way that the fundamental analysts do, there's no real point of us actually seeing that or going with that. What we tend to see is we monitor the price action, and this the news and events do drive price for a short period of time, but the price for us is the most important thing to watch and to sort of like to speculate or to look to speculate on. There's a couple of questions about whether we trade. I mean, this sort of service is again, this is available through multiple brokers. All of our clients are retail platforms, so you can go onto a number of retail platforms. Let us know what broker you trade through. We would have had conversations with them in the past, and that's what we would look to do. In terms of a retail product, we had a retail product before. It was something that we're sort of like considering in the future. I'm not going to promise anything here and now, but something that would combine all the different types of analysis and give a real nice retail product is something that I'd love to do and would definitely push for in the future. But it's very difficult. The retail guys can access a lot of free, good information online and tend to sort of do that rather than want to pay for it. Whereas obviously the online brokers can afford to sort of like provide this sort of data. They can just like subscribe to us and they give it to all their clients for free. So that's what. Yeah, I mean, so this is medium term risk, so I wouldn't sort of like expect too much volatility from it. Who knows? Definitely wait and see on that. Will you be taking less risk coming into it? I wouldn't. We normally just, as I say, just focus on the prices, focus on using the same amount of risk against all the different all the different sort of like products. We analyze 40 products intraday every day. There's a little bug in the system this morning. We've seemed to have analyzed Germany 40 about 10 times with a little bug in the system, so we're sorting that out. But yeah, we look at all different markets. We have different sort of confidence levels on them, and yeah, looking at all the different ones with 80 to 100% confidence on there. Yeah, we look at just the intraday charts, which are very, very difficult. Intraday markets are always really difficult markets to predict, but it is something that a lot of our clients really, really sort of like finding engaging for their clients. So yeah, that's a little bit of a rundown. Again, sadly, it's not just available as a product online through a retail account. Not yet. Watch this space. I'll do my best. So let's dive back to. Was I showing all that, Jamie? It was showing, wasn't it?
Yeah, don't worry, it was all there.
All right, okay. I had a little moment there where I thought I was talking away and no one was actually seeing anything. But anyway, Yeah, another question from Ryan. Does that give you entry positions and so on? No. One of the things, we're regulated by the FCA. So we can advise on investments. We've got regulations to do that, but the true signals, we don't do that. They're signals, so it's our interpretation of the market, our interpretation of where things are going. We attach an entry point, a stop price, and two target prices to it. Risk reward is always at least 2 to 1. It's just a way that, and what we do is we monitor every single trade idea we do. Since 2015, we've been doing this. We've got a track record going back that far. We've got a performance, which is a positive performance since then. And yeah, we sort of like say, yeah, risk, say 1% on each trade or that you do, but obviously that's very difficult to do if you've got 40 trade ideas that are triggering. Normally we see 10 to 12 trade ideas on average trigger a day, so you know, risking 12% wouldn't be a good idea. It's really about sort of like, you know, finding a market that works for you, and using us as one of those tools. You know, don't just look at the technical analysis, look at, you know, other analysis, or, you know, look at your own charts as well, get your own feeling, and we're used as almost a confirmation thing. So that's what we do. We also provide the trade idea, which is, I know it's a bit punchy to do that, and very high risk, but at least we can sort of measure our performance, how good or bad we are doing in predicting the markets. Win rate around about 44%, I would say, over the last 5 years, but performance has been positive because we always look for a better risk reward. I hope that summarized that. So let me look at what's coming up. Day ahead, 1:30, what US unit labor costs. Oh no, what we've done, Jamie, I missed out the gun to head. We're going to do a gun to head, aren't we?
Yes, we are.
So this is the fun time of day. And we will pick a trade. Myself and Jamie will look at market, pick a trade live on air, and we'll put a stop and a target to it. And all ideas are placed at market as we speak. We publish them on TradingView, so they're all there for you to see. The trade ideas expire at 9 p.m. So whatever the price is traded at 9 p.m., that will be the closing price unless it's hit its stop or unless it hits its target. And we have a performance sheet which Joe updates. Joe's back next Tuesday or Wednesday, and he will be able to update all the trade ideas that we do, because we don't bother with that, do we? So have you got something, Jamie?
Yes, I am happy to go first. So I'm taking a look today at the pound against Swiss franc, and what I'm seeing here is a pretty significant support level that price has just got to in the last day. So this, where we at, it's kind of like a 1.1525. You can see that price has wicked off this a couple times back here. Didn't quite get down a few times, but held up really nicely here, and we're back at that level now. This has seemed to really test resolve. We did get down a bit lower actually than the previous lows, but the buyers are attempting to defend it. And to me, with the aim of this game, it's got to be called right here, right now, at the live price. So while, you know, this, you don't know, maybe it will hold, maybe it won't, but we can get some good risk reward out of it, and that's the aim of the game. So I'm going to look to buy this at current price, which is 1.1526. There we go. We'll keep the stop just below, really the low of this candle that we've got here. I mean, this is a 4-hour chart. Maybe if we go down to 1 hour, you can see we've got a bit of a bullish hammer potentially forming. And if we do get a close around that level in the next 14 minutes, that will confirm that. But to me, yeah, if price gets any lower really than the stop, that means the support level is not really holding up, and it invalidates the trade idea. We could go for something a bit crazy and punchy in terms of profit. Joe likes to do this, but for me, on these ones that end at 9 o'clock, I'm like, realistically, is price going to get up there? Realistically, probably not, but I don't care. We're going for it all. So, sorry, I didn't see our stop level. So our stop level is 1.1499. We're going to target all the way to the top of this channel, which would be at 1.1710. So I think it's probably unlikely to get that high in just a day, but you know, anything can happen. So that will give us a nice 6.81 return, if we do get that. Like I said, I think that's unlikely, but if we do get a hold up of this level, you know, perhaps we can kind of end up somewhere in the middle of the channel today, which would be absolutely fine as far as I'm concerned. So looking to get long on pound Swiss for my gun to head today.
Nice one.
Thank you.
Let me dive into mine. Before I dive into mine, I'll also show you a pretty nice acuity product, which is the new sentiment wheel, and I'll sort of like maybe look at it just to help me with finding my trade idea, because I like to put all these things together. So I was looking at maybe fading either the DAX or the Nasdaq, and we can look at this is the DAX. This shows this gives market alerts with when a new sentiment is having a bullish or bearish move, and you can see that this is posted a couple of days ago a 60% confidence in Germany 40 or DE 40 rallying in the next 9 days. It did work. New sentiment is edging higher towards that sort of like parity level, positive level, but not quite getting there. US 100, again, same sort of thing at the moment, although you see the white line here is the price. New sentiment is remaining sort of like elevated at the moment, although, and it is moving a little bit more positive on the 24-hour basis. This is like a 7-day moving average of new sentiment down here, which is a nice little chart. And again, you can see on that 80% chance of moving higher. So the indices are pushing higher at the moment. Oh, let's look at the S&P. What can we see in the S&P? This is pretty decent. You don't usually see this, although the level of confidence is low, 30% confidence. You can see the news sentiment has absolutely collapsed into negative territory on the S&P. Maybe that's the one I've been looking for, Jamie. I wouldn't have looked at that. That might all be a little bit confusing for you, but bear with me. So when I see that news sentiment moving aggressively lower like that, I think, right, news drives markets. What I do is go to the technicals to get the entry points and to get confirmation as well. We might be seeing a topping formation in the technical side of things. So for me, when they line up, it just gives me a bit more confidence. It's telling me maybe, you know, if you see some negative thing on the prices, you're also seeing it on the sentiment. That's the right way to go. So I'm settled now, Jamie. I'm happy now. I'm going to sell S&P rather than anything else. Now, typically what I do, I like to be a little bit aggressive with these, although, you know, as Jamie said, there's no real reason for any significant moves today. I can be quite tight with this stop. I'm looking at it on a 4-hour chart. The high we've just seen is 4,187. That was posted yesterday. Today, the high has been 4,153. So not really a lot going on. But we can just bring this stop level down and get some nice risk reward out of here. How about there? I'm going to go for a 5-to-1 risk reward. Let's have a 50 tick stop, which is a decent sized stop. I mean, actually, no, I'll tell you what, I'm going to be a lot more aggressive than this. I'm going to have a 25 tick stop. How's about those apples? And I'm going to go for, oh, that's being a bit carried away. That gives us, no, what am I doing? Stevie boy. I'm going to go for an 8-to-1 risk reward, not an 800 points. So yeah, this is what I'm going to do. I'm going to sell the S&P, targeting a move down to this support area around about here, just past the 38.2. It's a bit aggressive for today, but it's a bit of fun as well. Targeting a move to getting short here at 41.43. Targeting a move to 39.43, and the stop is at 41.68. That's what I'm looking at today. So that's my. Nice. I'll get that published as soon as we run through the what's ahead of us today. I will answer all your questions as well. Running out of time here a little bit. So US unit labour cost out today 130. Key events over the next week. We've got the 10th. We've got US consumer prices On the 12th, we've got UK GDP, and also got US University of Michigan consumer confidence, all sort of like quite decent figures to watch out for. Now everyone's looking for the next inkling of where the market's going to go, and what's going to happen to rates, and what's happening with consumer confidence, yeah, that's going to keep us quite busy. So great to see you all. Thanks for joining in with a chat as well. That's really helpful, and always here to answer your questions. So yeah, look forward to seeing you tomorrow. Me and Jamie will be back tomorrow.
Thanks, everyone.
Cheers.
Bye bye.